The Soybean School on RealAgriculture.com is brought to you by High Stick NT, Cruiser Max Beans, and Pride Seeds.
Most soybeans, they've been very interesting as we head into harvest here. What are you seeing in this soybean market right now that sort of maybe causes a bit of a change or some cause for concern?
Well, right into today it's September 12th and we got a USDA September WASDE report out today. But prior to this report, just the last few days, beans had for 2012 November futures, it hit record all-time highs of 1789, and then all of a sudden we had a little bit of a sell-off that ensued that took us down about 1722 yesterday, and the expectation was that the USDA today was going to provide some higher yields. There was Isaac, hurricane, and some other rainstorms that perhaps had helped the late planted beans and the double crop beans in the US. When I came back from Farm Progress in Boone, Iowa, I was of a different opinion. From the farmers I was talking to, I felt that last week in August weekend they had gotten about 1.5 inches of rain, and I felt that was still too late because the maturity in the beans had closed already. Definitely those Isaac hurricane rains were really late because that just happened over the last week or so. So ultimately I thought that yeah, there's a small probability that might happen, but that was an excuse the funds decided to take profits on. And today, guess what? Yields came in at 35.3. Market was looking for 35.5. Last month was 36.1. Ending stocks came in at 115, unchanged from last month. Market was looking for 110 million bushels. So because we had sold off about almost 70 cents from the high to intraday low yesterday, we're getting a relief rally, a dead cat bounce, whatever you want to call it, maybe a short covering rally. We're up 47 cents, up to almost 17.50 again. I can't rule out that we retest the highs at 17.89. We have done a pretty good job of rationing demand on corn, and only this past week have I seen some rationing on the export side for beans. And so I think we still further have to do some further rationing here on the main demand side of the soybean balance sheet before we head lower. And so our target was 18.50. We raised that about a month ago, and I can't rule out that we still go there. A lot of the experts in the States are still looking for $19, $20 beans, but eventually you got a big South American crop, 140 million metric tons, 1.2 billion more bushels. Chinese demand is not that strong. It is dry. They're going to start to plant next week, but it's something to watch. It's a flip of the coin whether they're going to have a big crop or a small crop. But I think even with a smaller crop, because it's dry, it's still going to provide enough bushels globally that eventually the long-term trend on beans is lower for 13, not higher.
So let's assume we are sort of at that, we have that toppy sort of feeling, you know, it's starting to feel that way, and I agree with you. What does a correction in this kind of market look like?
Well, if you go back to last year when corn peaked at 779, the month of September took corn futures down 212, bean futures 313. My biggest concern is all the experts in the States are bullish, and when they're bullish, you know what to do. To the opposite, because that's usually where it's going. Number two, the funds are very long, both corn, beans, and wheat combined, and they can pick on any story, any excuse to take profits, and when they want to take profits, they all want to go out the door at the same time. Very quickly, you're going to see limit down days, and so much for $17 beans. You could see $14 beans in a flash.
Woulda, coulda, shoulda.
Exactly. So, you know, you got a lot at stake. Now, I know a lot of farmers are not willing to do much here because they're waiting for harvest. Harvest around the corner. Some have already done, some are starting, maybe some rain delays, but maybe you book too much, and you know, fields are variable from field to field or from row to row. So if you want to wait for harvest to determine what that yield is, I think you're okay. I don't think the downside risk is too much, but be careful because you can move down fairly quickly. If we've got all of the negative, all this news factored in, then we could see a top very quickly and then go down from here, because once you get past harvest, market will turn to outside markets, South America, and next year's crop. Farm Future Survey suggesting 78 million acres next year. 78, apply 44 yield, which is at the high end, so don't shoot me for that. Just demand a little bit, and you got ending stocks going from 115 to 300, and maybe as high as 400 or 500. That would fix this balance sheet. That would fix price. You got a decent South American crop, and you're looking at beans going considerably lower in 2013.